Hi everyone, welcome to today's video. So first and foremost, let me take you to my screen and show you something very interesting about the Tata Motors stock. So you will see that back in 2020, this stock was trading at roughly 70 rupees, and it moved up to roughly 500 rupees in less than 2 years. Why was there almost 7x growth of this stock? The reason was the EV story. That EV industry was gaining a good narrative. Tata took a lead and its stock price literally skyrocketed. So now the obvious question comes that, okay, why is it that Maruti Suzuki is just dangling around? It is not doing anything in the EV space as of now. Does it not want its investors to make money? So I don't know the answer. You comment and let me know. But I will do a discussion of this particular topic as to why Maruti is not entering the EV space as of now, what could be the potential reasons, and at what point in time you should be taking positions in Maruti's stock. This becomes a super important video because if you can time the entry of Maruti into the EV space and figure out if it will become a prominent player in that industry, this stock will easily 2-3x without taking too much risk. So it becomes a very interesting point for us investors to understand. So I'm going to present a simple 6-point analysis. Just listen to it and a lot of your doubts will get cleared. Also, a very big shout out to our sponsors for today, which is Kuku FM. It's an excellent audiobook platform and you can listen to a variety of knowledge related shows, books, and a bunch of other knowledge related material. For example, I'm currently listening to One Up on Wall Street, which is a summary of the book by Mr. Peter Lynch. He's one of the biggest stock investors in our time. He writes wonderful quotes. I have discussed those quotes also many a times. So you could consider listening to such shows and such books on Kuku FM. I'm also presenting my curated list on the platform. So just go check it out. They are also running a very special offer, so you can avail that benefit as well. Use the link in the description box. So let us start discussing in point-wise format some of the basic differences between the business model of Maruti and Tata Motors. Point number 1, the type of product that Maruti sells and the type of product that Tata Motors sells are very, very different. For example, through this chart, you can clearly see that Maruti has approximately 60% market share in compact SUV segment. So it is a very big space for Maruti. It is catering to a lot of customers that want to buy small vehicles or compact vehicles. That is the market segment that Maruti wants to be a leading player in, and that is where their focus is. So this is a very important point for us to understand that when we talk about the EV industry is very big. It comprises of 2-wheelers, 3-wheelers, 4-wheelers. Within 4-wheelers, there are a bunch of different EV oriented vehicles. And the segment in which Maruti has a moat is the compact SUV segment. So this is the point that needs to be very clear. Now again, if I show you the volume breakup as to if 100 cars are being sold under the Maruti's brand, then how many of those Maruti Suzuki cars will fall under each of these car segments? So you can clearly see that the compact is 43% and mini is 17%. So 60% of the business comes from the small car segment category. If you compare this with Tata Motors, the game is slightly different. Now here is a very quick look of Tata Motors. Now here you can see that the Tata Motors group has 44.6% market dominance in medium and heavy commercial vehicles. So this becomes a very important market for Tata Motors. Tata Motors also acquired Jaguar. So it is also present in that luxury car segment, which is where the current EV segment in the car industry currently is. For example, if you talk about Tesla, then Tesla will be classified as a premium category car and not an average car that a lot of people are buying. So this is the first key point that you must remember, that Maruti is targeting separate set of customers and Tata is targeting separate set of customers altogether. So this brings us to point number 2, that if we talk about the EV industry as a whole, then where is it the EV car segment industry is growing? Now here is an important piece of data for you. The data is slightly old, it's 2018, but the trends remain intact. And the bifurcation of the data is really good. Therefore, I'm showing this to you. So you can clearly see that countries like Norway are very much ahead in terms of the adoption of EV cars. This is the new passenger car sales. So this is the data that we are looking at. We are not looking at 2-3-wheeler segment. So this is point 1. So if you go by volume, then China, US and Norway are top 3 countries where the number of units of cars which are EV are sold. So this is a very important point. And here you will not see India being featured. So the point being that India has not adopted the EV movement as of now, at least in the passenger car segment. So this brings us to the obvious question that, okay, where is it that Tata and Maruti are selling their products right now? So if you take a look at the location wise breakup of products for Maruti, you will see that in India, they sell almost 83% of their units. Whatever car they produce, manufacture, they sell it in India only. What about Tata Motors? So the location wise breakup of Tata Motors look very, very diverse and interesting. They are selling cars in China. They are selling cars in Europe. They are selling cars in US. They are selling cars in UK. All these markets are already slightly mature when it comes to EV adoption in the passenger car segment. So this is a very important point to keep in mind, that Maruti the market right now in which it sells majority of its unit, that is not mature when it comes to passenger EV vehicle industry. But on the flip side, markets abroad, especially European, Norwegian countries, US, China, they are all slightly mature, and Tata Motors is trying to build its business offerings there. Now you might see that, okay, Akshat, it's fine that maybe adoption in India is not very big right now, but it will pick up with time, no doubt about that, because this is where the entire automotive industry is moving. We are moving from conventional vehicles, and this migration towards EV is given. It will 100% happen, and I agree with you. But you need to understand the rate at which this migration from conventional or diesel or petrol automobile will happen to EV segment. Now, while there are hundreds of studies, we should just use basic common sense to figure out an answer as to how soon this adoption of passenger car vehicle in India will happen. Here is a very important graphic for you, so I will request you to pause the video, just read this very carefully, because this is a very important graphic and I will explain. So essentially, this is the current trend by vehicle category in India right now. So what you will see is that two-wheelers make approximately 48% of EV vehicles sold in India, and three-wheelers make approximately 45%. So these two things itself make like almost 94-95% of the market. Whatever remains will be four-wheelers and heavy vehicles. So we are very far off as of now in terms of the adoption. Please take a look at this earlier chart where I showed you the data from Norway and bunch of other countries. This was 2018 data, and even then the new passenger cars that were coming out in the Norwegian market, their sales constituted roughly 50%. So India as an EV market in the car segment or passenger car segment is still very much in the nascent stages. So the bottom line here is that we should not get super excited that, okay, you know what, EV revolution has come, I'm just going to invest all my money in all automotive companies and I will get filthy rich. No such thing unfortunately is going to happen, and you might end up incurring a lot of losses. So please be a little bit careful. Let's move on to point number 4 as to why the EV adoption in the passenger vehicle segment in India is not picking up at such a dramatic pace. So there was this excellent study that was done by McKinsey, and here is a chart. Again, please zoom in and see. And it categorically outlines the fact there is a difference of approximately $12,000. $12,000 is a lot of money. It's approximately 9 lakh rupees. So there is a 9 lakh rupee difference between EV and IC based engine vehicles today. So this is a big difference. Okay, adjusted for purchasing power parity and a bunch of other different measures. Even then, the cost of electric vehicle in India is going to be very high. So as per my market research, you could not buy a good EV for less than 11 to 12 lakh rupees. That's a lot of money. You can go and buy a conventional automobile at 6 to 7 lakhs. So there is a huge price difference that needs to be bridged as of now. And high prices is one of the key reasons why Maruti is not jumping into this game. So the companies that have entered into the EV space, in order to release new products, they will have to undertake a lot of R&D expense. Now this can become a nightmare scenario for a lot of companies that are jumping onto this EV bandwagon. Maruti is sensible so far in terms of not jumping the gun here. They are waiting for the entire cost structure in the industry to rationalize, and then they will probably go and take some positions. Now comes the fifth point that, okay, fine, the cost structure is very big, but at some point this cost structure will come down. So should I be taking positions in Maruti or not? And how soon should I be taking positions? Can you comment a little bit there? Okay, so let us first and foremost understand from that same McKinsey report, they have given the fact that, okay, see, that cost reduction levers could be pulled and cost of the electric vehicle can be reduced considerably. So this is good news for a company like Maruti. But the problem is that in order to rationalize this cost structure, a lot of changes need to be made. And these changes, for example, the direct cost that a lot of companies like Maruti undertake, they will have to cut those. They will have to cut down a lot of indirect costs. They will have to depend on their OEM manufacturers. For example, Motherson Sumi is one of the major suppliers for Maruti. It builds a range of parts for Maruti. So it has to undertake a lot of R&D expenses or borrow those good practices from outside India and then rationalize its own cost structure so that it can supply a company like Maruti good material at a low cost. So all this stuff needs to be rationalized, and all this is going to take time. Another key point to remember here is that if you take a look at the Maruti's manufacturing facilities, so this is an entire paragraph that has been dedicated on Wikipedia, so please go and read it and you will get a sense that Maruti Suzuki does almost all of its manufacturing within India. But is that the same case when it comes to something like Tata Motors? The answer is no. Why am I telling you this? Because the reason again is fairly simple, that for example, if there is some type of manufacturing innovation that takes place in Japan, and if Tata Tata Motors already has a facility there, they will be able to leverage that quite quickly compared to Maruti Suzuki. I know a lot of people will say that, you know what, Suzuki is a partner of Maruti, Japan based. If Japanese innovation happens there, then Maruti can also leverage that bandwagon. I 100% agree. I'm not denying it. But if you study the supply chain of Tata Motors, it is much more diverse compared to something like Maruti. Maruti is focusing a lot on the Indian market. Tata Motors want to become a global brand. So from that particular perspective, there is a strategy difference in terms of where Tata Motors is setting up its factories and bunch of other manufacturing facility vis-a-vis where Maruti is doing the same. So for Maruti to get into this EV space, they have to rely also on the fact that to what extent the Indian government is giving a push to the EV space, especially in the car segment, not two-wheeler, not three-wheeler, but the car segment. So when is this going to happen? I don't know. I'm not Modi ji or Nirmala ji, and I don't know when the government is going to get onto this bandwagon and would try to rationalize the cost structure. But the bottom line remains that the industry right now in India is at a very, very nascent stage. There will be a lot of time that will be spent on doing R&D, bringing the cost structure down of different batteries, bunch of other different things. And at that point, it might make sense for a company like Maruti to jump into this space. So this brings us to the sixth and final point. According to Maruti, they are going to launch an EV by 2025. So there is good 3 years left. Still now, there is a lot of R&D work that is going on, and by 2025 there is a very high likelihood of, number one, the cost structures of EV vehicles to come down. Innovation will take place in some part of the world and companies are going to adopt it and save cost. So this is the first key point. Second, the supply chains will become much more reliable for a companies like Maruti by then. For example, if they have to build some factories outside India also, they can go and do it if it fits with their EV plan. So it gives them time. So this 2025 move seems sensible for me, because by then, if there is not enough development that has happened with this EV adoption, then Maruti might push its goal to 2027 and will wait and watch. So what is it that we should be doing as investor? Number one, I think Maruti is already at a great buying level, no doubt about that. I don't think the stock is going to fall too much. That's the first key point. So if you want to build positions in it, do it, no problem, but don't expect any magic to happen on this stock for at least 1 to 2 years. Number two, will I be buying this stock? Yes. Will I buy it right away? No. I will wait for at least a few months. Then I will gauge positions and start buying this stock. Number three, will I be buying this stock in bulk? Absolutely not. I will not buy this stock in bulk at least till 2025, or if there is some major sensible announcement made by Maruti where they ascertain that, okay, you know what, that the rationalization of cost structure has already happened in this industry very, very quickly as per our understanding, and therefore we are taking positions in 2024. So in that respect, I will invest early, but at least as of now, I will buy a little bit of Maruti and I will keep on consolidating my position. It is a solid company. It has a sensible plan in place. Right now, the valuations are not rich at all for a company like Maruti, and it will be able to jump onto this EV bandwagon because they are playing this game very, very sensibly. So I hope you enjoyed the video. Please press the like button and I will see you tomorrow. And also check the links in the description box for Kuku FM.